Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Monday, July the 8th. The year is 2024. Let's talk trading. Weekly open and gap with Walmal. These videos are for educational purposes only. Your results may differ from mine and different from Walmal's. And as always, make sure your risk management is in place. Don't lose any more on one single trade than you are willing to lose. In other words, stay in the game. So we look at the weekly chart and we can see all the gaps have filled except for the Euro Canadian. The pound dollar is 44 pips above the open and just now a pip off the high and 54 pips, 55 pips off the low, and we haven't hit the weekly pivot yet, down at 127,489. And we're putting in the opening range for the week at the moment. As you can see, we are 132 pips above the opening range for the month. And for those of you who've been following my quote, dollar yen predictions, unquote, we are sitting at 160.68. So if you short it somewhere above 161, you'd be in the pips. If we take a look at the monthly chart, 193, 194 above the open, 0.4 off the high, and 224 above the monthly low so far. And as you can see, if you look left, we are still in last month's upper wick zone. Also, looking left, you can see the weekly charts. If we can get above, let's see, what week? 1, 2, 3, 4 weeks ago, 128.60. We need to break there. Then we'll be in a range where we can maybe consider some top scraping. For the year, 127 above the yearly open, 193 off the yearly high, and 224. No, I'm sorry, 128. No, off above the yearly open, 54 off the yearly high, and 540 above the yearly low. I was looking up here, I forgot this is the monthly. And we had an inside bar 2 days ago that we are well above. But there is some inside bar action on some of these pairs, according to the dashboard. 57 pips on the day, only 3 pairs. Over 100 pips. And I guess also if you look at the new beast, the pound New Zealand dollar, it's at 2.0911. So it broke the 2 mark. And the buy zone on the at the open here, it looked like there was a sell trigger, but it probably wasn't due to spread. But you saw earlier in the London session, it looks like we got a trigger and around 128.05, and prices hasn't looked back since then. Red rats, get ready to feast. We're making a new high for the day. And just wait for this thing to turn over. Wait for your signal. Don't rush it. On the pivots, Bambino Flex indicator indicated a long. Price near the pivot was a long. And let's see, looks like we did get near the pivot. Price near R1's indicating a short according to the plan, but we are above R1 by about 6-7 pips at the moment at 128.36. I just noticed we are in the launch pad, 128.43. So look for price maybe to get up to the 60s. We've taken out that daily pivot. As I said earlier, we haven't taken out the weekly yet. And we've taken out the monthly. And for the intraday traders, we've got an H4 missed pivot so far. This H4 candle down at 128.30. In and out of that upper wick zone a few times. Looks like we dipped in 2 hours ago and broke out of Friday's high. For the smart range, once again, now we're up to 60 pips. We've broken out of the previous week's high by 27 pips. We missed the previous week's low. No, I'm sorry. Yeah, by 27 pips we broke out, but we're nowhere near the previous week's low. Haven't been. So Walmal, how goes your trading today?
Well, I made my core, but it wasn't easy, that's for sure, just because when I was trading, we only had an 8-pip range for the hour. Made it difficult, so that meant lots and lots and lots of trades. I think I took 9 trades to go and get my core of 16 pips. And so it was not pleasant in that respect. I don't have any losses for the day, so I guess that's a good thing. But and I didn't make any mistakes. That's even a better thing. Meaning mistakes, what I mean by mistake is not taking a losing trade, but a mistake is going and violating one of my rules. So that's a good thing. And just something I just observed while you were talking is that on the weekly chart, we have be it sloppy, but a head and shoulders pattern, and it's a rising head and shoulders pattern, which indicates we're going to go, this market should go back up. This hour, we just went and broke the left shoulder, which was at 28.30, and the right shoulder is at 28.60. So that tells me that there's a very, very high probability we're going to get to 28.60. Using your adage of the launch pad at the 40s, we know that it likes to go from the 40s to the 60s. So that is, I don't want to call that confirmation, but a little bit more ammunition to go and sit on, I guess. And then the top of the head on the head and shoulders pattern is all the way up at 28.95. So if it does make it to the 28.60, the next target for you would be 28.90 if you're one of those guys that likes to go and trade, candlestick patterns. And that's the head and shoulders is a pretty solid pattern, that's for sure. But and I think it makes sense because what you see there is that the market's moving up like it seems like it is. What happens is you come in, you make a high, you come back down a little bit, you come and then make a higher high, and then you come back down, and then you come back up, and you make a high, but it's not as high as the previous high, but it's higher than the first high, which was the first shoulder. And then when it comes back up again, that's when it usually goes and takes off and runs all the way to break that further, that head. And sometimes it likes to then at that point explode up and set new records, as they say. So just something to pay attention to. So what do I do with this, with my type of trading? Do I trade head and shoulders? No, I don't. But I observe those things, and then I say, what is my bias right now? That's something I can base a bias on. Something that doesn't mean that I'm automatically, a green bird at this point in time, but at the same time, just something to say, hey, this market looks like it wants to go up. So I just put that as in my toolbox of saying that there's a good chance this market's going to go up. What does that mean? It means that if I'm taking a short, I'm getting to my short, and I'm going to go and get out when I see the first sign of trouble. If I'm going long, what I'm going to do is I may give it a little bit more leeway. In other words, go in, go long, and if it doesn't go exactly my direction right away, I may stay in a little bit longer, hoping for it to turn around. Not that hope is a trading plan, but I'll just give it a little bit more rope to go and hang itself,
Yeah.
or allow me to run further.
Yeah, I noticed, like I said, 4 weeks ago on the weekly chart, we had an outside bar with the high right around 128.60. So normally, as you can see here on the chart, when it breaks a weekly outside bar, hey, there's usually some pips to be made.
Exactly.
So,
And again, it's for me anyway. It doesn't mean I go and throw all my eggs in that one basket. It's more of that's accumulating data or accumulating evidence of what the market wants to go and do. I can't say that that's what it's going to do, but what I can say is, hey, I've seen this before, and when I've seen this before, this is what it's done. Therefore, I'm going to go and place a bet there, and that's what you do. Because that's all we're doing is placing bets.
now, we're not going to have the is trading gambling argument.
Well, it's funny, in England, FOREX trading is, by the government, is listed as betting, and that's how it's taxed. Not in the U.S., but in the U.K., it's done that way. And what's interesting over there, the taxes on gains that you make through betting are very, very low. And so I've known several traders who have, over the years, said, you know what I'm doing? I'm moving to England, and I'm going to go and become an English citizen just so that I can go and make money. There was a guy, I don't remember his last name, but his name was Nick, and he was a big guy on FOREX Factory at one point in time, and he made a big deal about doing that. And he moved to England probably 20, 30 years ago, and he still posts over FOREX Factory once in a while, and but he did specifically for that reason, just because of tax ramifications.
I wonder if he's the same guy that was posting on Trade Station way back when.
He might have been. I don't know.
Yeah. Well, I pulled up the 1 minute chart, and it looks like we just filled that return bar all the way down to about 30, about somewhere between 39 and 40. Put in a 3-ball, and now it's coming back down into this, what would you call this little range here between 35 and 40. Oh, wow. Looks like you could have 2-pipped that one to death, Walmal.
Yep. And that's what I had to do this morning. That's how I made money. Even though we only had a range of about 8 pips, it's sort of like, okay, I'm going to take a pip here, I'm going to take 2 there, and that's what you do. You just keep on going back and forth with it. So you can make money. It's not what I prefer doing, but it's a way to make money, and so you do what you got to do, and you just, I can't dictate what the market's going to do. All I can do is react to what the market does and take advantage of what it does when I see something.
Yeah, thing is, it was barely moving a pip a minute. That's frustrating.
Yep,
it can be.
Exactly.
If you're in.
Oh, yeah. There was one trade this morning. I know we were almost out of time. Just a quick story. I was in one trade this morning where I was looking to try to get 2.5 pips, and it literally was at 2.4, and I sat there for 45 seconds, and the market just sat there for 45 seconds and didn't move a single tick in either direction. And finally I just went and said, I'm done with this, and I clicked close, took my 2.4, and of course then ran up and would have got me 2.7. But
that's life.
But that's life, exactly.
Yeah, and that just goes to show it's not what you trade, it's how you trade it. So go out there and drain the banks, traders. This is TheRumpledOne, over and out.